Well, it's time now for the day's business news. Stephen Carl is with us in studio. Good day to you, Stephen.
Hi, Eve.
Let's start with some good news, Stephen. Well, especially for us here in France.
Exactly. Well, we like a little bit of a nice surprise early in the morning. And new figures today have given the government a nice surprise because the economy grew by a better than expected 0.6% in the first 3 months of the year. Now, that might not sound like much, but it's the best figure the French economy has seen in nearly 2 years and significantly above the growth figures for last year. Now, growth was boosted by lower oil prices and the weaker euro. The National Statistics Office also revised down, though, the overall figure for growth for last year to just 0.2%, with no growth at all in the last 3 months of the year. Now, this is good news for the French government. The Finance Minister, Michel Sapin, saying that he's expecting growth to be over 1% this year. There are some warnings. The momentum may not last very long, though. France's central bank said yesterday that it's expecting growth of just 0.3% in the second quarter from April to June. So we'll have to watch to see how that develops.
So how's that affecting the market so far this morning?
Well, shares opening up in Europe today, but it's interesting to contrast those figures from France with figures that come out from Germany for the same first 3 months of the year. Growth there disappointing. Europe's biggest economy growing by just 0.3% in those first 3 months. As you can see, shares opening up in both Paris and Frankfurt. So investors not too worried by those figures, but analysts were saying that there was, in Germany, the figures there hurt by a fall off in exports. Now, over in Asia, there was a batch of disappointing data from China causing some movement on the markets there. Growth in retail sales hit a 9-year low in April at growth of 10%. The Shanghai Composite and the Hang Seng, you can see they're both trading down.
OK, well, let's stay in France and the curious case of the businessman who says he's being treated as a spy.
Yeah, that's right. This is a man named Henri Progli. He was in the running to become chairman of the defence contractor Thales, which is part-owned by the state. The government told him, though, that he had to drop his business interests in Russia to be considered. And he says he's being treated like a spy. Shirley Sitman has the details.
Henri Progli has already managed some of France's biggest companies. Water and waste group Veolia, energy company EDF. He wanted to add Thales, a French defense contractor, to the list, but the state, which holds 27% of the company, had other plans. The economy ministry said Progli would get the job only if he drops his Russian interests. The businessman is on the board of ABR, which manages the assets of Russia's Russia Bank, one of the banks targeted by U.S. sanctions due to Russia's role in eastern Ukraine. He's also an advisor to Rosatom, a Russian nuclear group. Henri Progli says the government has humiliated him, implying he could leak sensitive information to Russia.
I have had enough of suspicion of humiliation. This has to stop. Taking me for a puppet, a spy, a greedy man, a traitor.
Economy and Industry Minister Emmanuel Macron says working for a Russian nuclear group is incompatible with managing a French defense contractor. He denies smearing Henri Progli.
We didn't stop Henri Progli from taking the helm. We asked him to choose. He made a decision. I respect Henri Progli. What interests me is that Thales remains stable.
Progli says the real reason the government blocked his nomination is political. The businessman is close to former President Nicolas Sarkozy, who now heads the opposition party UMP. When he was in power, Sarkozy chose Progli to manage EDF. He was replaced when socialist François Hollande was elected president.
A quick look next at some of the day's other business stories. The carmaker Nissan says it's recalling more than 1.5 million vehicles over the ongoing problems with airbags made by Takata. That news coming just before the company announced a jump in profits to 3.7 billion euros. The results helped by a weaker yen and strong sales of its new models of cars. And the owner of fashion retailer Zara could face fines of more than 20 million euros in Brazil over the treatment of workers in factories that make its clothes. Inditex signed an agreement with the Brazilian government in 2011 to improve conditions for workers there, but the Labour Ministry has found more than 7,000 violations since then. Inditex is contesting their report, but still could face big penalties.
Well, finally, after that record art auction we were looking at yesterday, that Picasso painting that was sold, you've been looking at whether or not it was really a good investment.
Yes, well, now the Woman of Algiers sold for a record-breaking $179 million. The last time it was sold was in November 1997, when it went for just under 32 million. So that's a pretty impressive return on investment in that time. But let's see, how does it stack up against the other things that you could have invested your money in between 1997 and 2015? If you compare, the Picasso investment was up 462%. That was the difference in price between 1997 and 2015. If you'd invested in property in London, it would have gone up by 334%. If you invested in gold, which I find quite surprising, gold only increased in value by 286%. And the worst investment on this list is if you'd invested in shares in the FTSE 100 in London, which is surprising because stocks do well in the short term, but perhaps not over such a long period. Because the problem is you can't really find many Picassos to buy and invest in.
I guess, which is why it holds its value. I have to say, I wouldn't complain with any of those returns.
True. We could all pool our money.
If only I could invest. Steve and Carl there at the Business News, thanks indeed for that.